Welcome to the key themes of 2021, where we're going to outline what we think are important themes for the financial markets in the year ahead. Let me start with what is perhaps always an important theme, but one we think will be crucially important this year, and that's Fed monetary policy. Why? Well, you may recall in August of last year, the Fed updated its statement on longer run goals and monetary policy. The objective of the Fed is to lift inflation on average to 2%. In other words, allowing for a period of overshoot in order to achieve its average 2% inflation goal. We think the Fed are going to look back to where inflation expectations were before the Great Financial Crisis. Since the Great Financial Crisis, the Fed had missed its inflation goal on 90% of the time. In the 5 years before the Great Financial Crisis, inflation expectations on a 10-year break-even averaged about 2.4%. Today, we're between 2 and 2.1%. So we still think there's further to go for the Fed to convince the markets on achieving its inflation goals going forward. So the key this year is really going to be communication. The big mistake going back to the post-Great Financial Crisis period was, of course, the taper tantrum, the speech from Ben Bernanke in May 2013 that resulted in a surge in real interest rates because of a plunge in inflation expectations on the anticipation of a policy change. We think the Fed are going to avoid that this year. And that will be crucially important in keeping real interest rates depressed and therefore the US dollar weaker. We're expecting, if the Fed are successful, about a 5% drop in the DXY, following the 6.7% drop in 2020. Okay, so with that, we're going to move across to Lee Hardman, also here in London, who's covering the second key theme.
Thanks, Derek. As we saw last year, financial markets were driven primarily by the COVID crisis. And unfortunately, we believe that's likely to remain the case, at least through the first half of this year. Of course, we're in a better position today than we were at the start of the COVID crisis, following the recent discovery of effective vaccines. That gives us all hope that we can return closer to normality in the not too distant future. But in the very short term, there is still the risk that the current elevated level of investor optimism will be tested by the hit to global growth at the start of this year. Certainly, the recent wave of COVID, which is hitting the global economy, is still accelerating and will lead to a bigger slowdown in global growth at the start of this year than was widely assumed just even at the end of last year. But we remain optimistic once the rollout of vaccines has progressed more widely, that this will allow the global economy to rebound more strongly during the second half of this year. Obviously, the rollout of vaccines is a crucial assumption, and there's obviously many risks that could be delayed, which would dampen the strength of the global recovery going forward. But we do believe that Israel is leading the way right now, and we see other major economies, and we expect them to step up the pace of their vaccination program going forward. Secondly, we also are optimistic that this downturn we see at the start of this year, that will put more pressure on governments and central banks to maintain unprecedented policy support throughout the year. And if that's the case, then we think global investors will remain mainly in risk-seeking mode this year, and we expect them to diversify more into non-dollar assets as the year progresses. And that should result in further dollar weakness in 2021. Now that's it from me. Back to Derek.
Thanks, Lee. And now we're going to move over to Singapore in Asia, where Sook Mei Leong is covering our third theme.
Thanks, Derek. Hi, this is Sook Mei from the Singapore team looking at AXJ currencies, which is Asia ex-Japan currencies. So how will AXJ currencies perform in 2021? We think that most AXJ currencies will outperform this year, although the gains will probably be more marginal than 2020, which witnessed a relatively strong rebound in the second half. We continue to forecast another year of stronger CNY appreciation against the dollar in 2021, although likely at a reduced pace of a 4.2% gain versus 6.3% in 2020. Our end-year dollar CNY forecast is at 6.25. We think that being at the forefront of Asia's growth trajectory, Chinese policymakers may well start to normalize monetary policy in late spring or early summer, but continue to stay with a targeted expansionary fiscal path. AXJ currencies will stay on the stronger end against the US dollar generally, primarily from the global easy monetary policy supporting capital flows into AXJ. The region will be at the forefront, reaping the benefits of the global post-pandemic economic recovery corroborated by vaccinations filtering down to their populations. Most AXJ central banks will stand pat, with many already at record trough rates. Those that may have room for limited rate trims in 2021 include India, Indonesia, the Philippines, and possibly Malaysia, with the rest likely to stand still, save for China. But AXJ currency gains are unlikely to be substantial just because of US dollar weakness this year. Save for the Indonesian rupiah, Malaysian ringgit, and Singapore dollar, all the other major AXJ currencies are running above or close to the 10-year real effective exchange rate averages. Risk and momentum indicators will still be subject to volatility relating to how COVID-19 control pans out. Currencies whose sovereigns have weak fiscal and debt dynamics and have adopted unconventional monetary policy options are also unlikely to see strong gains against the US dollar, if at all. That's it from me from Singapore. Back to Derek in London.
Thanks, Sook Mei. And finally, let's move to Dubai, where Ehsan Khoman is giving the overview for the fourth theme.
Thanks, Derek. Emerging markets have been hit hard by the pandemic, but even as the scar tissues from the lost growth and impaired fiscal trajectories will persist for some time, there has also been a remarkable resilience across EM asset markets since the virus took hold. And our core EM outlook for 2021 reflects a broadening and deepening vaccine-led global economic recovery that should lead to EM outperformance, given higher cyclical sensitivity of EM assets. Across global markets, EM assets embed most tangibly a combination of a repricing of cyclical assets, commodity exposure, China outperformance, and pockets of deep value, all of which could be in favor through the course of 2021. These tailwinds, in tandem with a recalibration of the US back towards the rules-based global trading system, loose US financial conditions, a robust outlook for EM capital flows through a risk-on appetite, rising reserves, and relatively cheap currencies, as well as our weak US dollar expectations, all provide support for the EM asset complex. We, however, caution that a selective approach in adopting an EM pro-cyclical stance is deserved in 2021, focusing more on bottom-up heterogeneous domestic developments rather than top-down macro to differentiate EMs. Notwithstanding our bullish EM thesis, we are not ready to lower our guard completely, with the prospects of COVID-19 setbacks, limited room for additional monetary and fiscal support following the unprecedented loosening in 2020, as well as the broad EM risk premium cushion remaining low, leaving it susceptible to any premature pullback in global liquidity, all suggest that headwinds remain on the horizon. From an FX perspective, undervalued EM FX has room to rebound further, primarily led by a weaker US dollar, with relative cyclical outperformance and attractive yields on offer, continuing to favor stronger Asia FX. And that's all for me in Dubai. Back to Derek in London.
Thanks, Ehsan, and thank you everybody for tuning in to our themes of 2021. We will be updating you on all of these themes as the year unfolds, given how important we believe these themes are for general financial markets in the year ahead. Stay safe, everybody, and we look forward to bringing further updates as the year unfolds.